Welcome to the Zions Bank Economic Update. My name is Joseph Mayans, and joining me is senior economist Robert Spendlove to discuss the current economic conditions. Robert, now that we're nearing the end of 2019, why don't we take a look at the labor market, some of the trends we've seen this past year, and then kind of what we're looking at going forward into 2020. And maybe let's start with job creation, where we saw kind of a good rebound here in November.
Yeah, I'll tell you, there's one word to describe the last jobs report, and that was blockbuster. Really strong growth and unexpected. So, kind of going into 2019, we were seeing signs of slowing in the job market. And you can really see that in the last few months where we're starting to see it coming down slower and slower. We were expecting that slowdown to continue going into the latest jobs report. The expectation was about 180,000 jobs, which is right around the average for the last year, but came in at 266,000 jobs, so much higher than we were expecting. Part of that, of course, is the impact of the GM worker strike. About 40,000 workers were on strike and left the labor market a few months ago, but then they came back in. So of that 266, 40,000 is striking workers. But so even if you take them out, we're still looking at over 220,000 new jobs added. Now, we still are seeing signs that we're in the late stages of the economic cycle. Right. And we're still seeing signs of that slowing. But this job report shows that we continue to see strength, continue to see resiliency in the economy, and we continue to see growth in the overall job market.
Absolutely. And I know one of the other trends, and especially something that the Fed has been paying very close attention to, and many other economists, is that the labor market expansion now at 110 months is really reaching more of kind of the underserved populations. When we talk about that group being reached more, what are we saying?
Yeah, that's a trend that we've been seeing also really emerging. It's one of the bright spots of the 2019 economy. Is not only has the overall unemployment rate gone down, but the unemployment rate of several of our underserved groups have gone down as well. So what we're looking at here, the blue line is the main unemployment rate that we kind of watch. The red one is what we call underemployment, which includes, in addition to unemployed, what we call discouraged workers, people who are in the wrong kind of job, people who are working part-time for economic reasons. And then the yellow line is African American unemployment, and the green line is Hispanic or Latino unemployment. You see they're all down. The top line unemployment rate hit 3.5% again last month. Really strong unemployment rate. But then also underemployment rate is way down. Hispanic, Latino, and African American are not quite at historic lows, but they're very close to that. So what we see is the economy is doing a much better job of bringing in people off the sidelines and back into the labor market.
Right. And I know in the past the Fed has taken a little bit of criticism for perhaps raising interest rates too quickly, which doesn't allow some of these economic benefits to trickle down to these other populations. What is it this time around that the Fed is seeing out there that they're allowing this to kind of continue?
Yeah, and this has been one of the biggest struggles of 2019. It's been one of the kind of debates. In economics, we call this the Phillips Curve. It's the relationship between unemployment and inflation. And again, the thought going into 2019 was that this lowering unemployment was going to cause wages to go up, which was also going to cause inflation to go up. And that's really what you see right here. This is 2018. And you see as that unemployment rate is dropping, wage growth is increasing. But then right here, February of this year, somehow that broke. And so we see even with the unemployment rate continuing to drop, the wage growth is also dropping. This should not be happening. And this is what several economists are just scratching their heads, trying to figure out why that's happening. Now, the real positive of this is we're also seeing big growth. We continue to see big growth in kind of non-supervisory, non-management worker wages are continuing to grow up to grow up to levels that we haven't seen for a long time, really since the last recession. So that's a good sign. But this overall, it just continues to underperform what we would expect. And then when you turn that into inflation, again, the Fed thought that rise in inflation was going to turn into a rise in, or that rise in wages was going to turn into a rise in inflation. And we just haven't seen it. For the entire year of 2019, inflation has been right around the Fed's target of 2%. We just got a new number just recently in inflation and came in at 2.1%. So we see very muted inflation and very close to what the Fed would like to see. So there's really not a lot of reason for the Fed to be getting too aggressive right now.
Absolutely. And so taking all these things into consideration, the solid job growth coming into year end, the higher wages for the lower earners and kind of the more muted wages for everybody else, and then looking at overall inflation being fairly low. Where do you think the Fed goes with their interest rates in 2020? Do you think they stay the same? Do you think they raise, they lower? What do you see?
Yeah, and again, if we kind of back out to a year ago, remember it was December of 2019 when the Fed raised interest rates by 25 basis points and then also signaled that they would be raising them 3 more times in 2019. Sorry, it was 2018, December of 2018, when they raised them, then committed to raising them more in 2019. So then you come forward, and not only did the Fed not raise interest rates 3 times, they cut them 3 times in 2019. So now we're in a range of about 1.5 to 1.75% on the federal funds rate. Now the Fed just recently met, and they announced that they think that they're at the right place. They're going to keep the interest rates right where they are. And I think that's a good decision. I think what we're going to see in 2020 is kind of a holding pattern. The Fed's looking at what looked like weakness in the economy early in 2019 now appears to have dissipated. And so there's still some uncertainties. The trade deals, especially the trade deal with China, the USMCA still are unresolved, and then we still have signs of weakness in other parts of the world. But when you look at the strong jobs report, when you look at the inflation numbers, it looks like we're in a pretty good holding pattern. And so the Fed has said, we're just going to stay where we are for now and watch how things go into the future and into 2020.
Absolutely. Well, thank you, Robert. Thank you for joining us for this economic update. For more information and analysis, please visit zionsmake.com/economy.